Hello, everyone. Good morning from Europe. This is Huram will be with you with the daily market update. We're going to look at the most important economic data published so far today and also the yesterday after yesterday's market update. And then we can check the market's condition and overall trends. Indian trade deficit lowered or narrowed yesterday. German 12 months bond yields slightly increased higher in Europe. Generally, in last days, we can see that the bond yields increasing. Same trend that we have in Japan. That actually in Japan we have this for longer term, but in Europe, after short term slowing down, again the yields increasing. In Israel, unemployment rate is to 2.9% from previous 3.1%, but still, down. But still slightly more than 2.8% expectations. But generally, the market expectation. Generally, the market's labor market condition is very fine and strong. Eurozone reserve assets slightly increased. Brazil economic activities contracted again, slower down, fell by 0.5% in July. U.S. manufacturing activity turns to the negative area in September. That's interesting. New York Empire State manufacturing index fell by 8.7 compared with 11.9 positive or increase that we had in the prior months. Generally, the data that also let's continue today. I can talk about the data, U.S. data and expectations. In Canada, manufacturing and wholesales, actually the Canadian manufacturing introduction and manufacturing production, and also the wholesales for the manufacturers wholesales, they are both increased. French short-term yields also, the bond yields for the short terms increased in French as well. Same trend that we had in Italy. U.S. short-term treasury yields, on the other hand, slightly eased. That's what the trend is in the United States against what's going on in Europe and Japan. Israel inflation slightly increased to 2.9%, down from previous 3.1. Slightly up from 2.8%, but lower than 3.1% market expectations. But generally, the inflation is getting slightly higher. Korean trade price decline slightly lowered, which means that from previous on the monthly basis, the previous month it was the import price fell by 5.9%. This month, sorry, in the annual scale. In August, in July fell by 5.9%. In August fell by 2.2%. Generally, still is down. Even thought in the negative territory, we had slightly better improvement, but still it's a down and it's a negative. That trade prices are negative, confirming the weaker demand, both external and domestic demand. Korean money supply, on the other hand, increased, showing that central bank trying to check other opportunities or other options to support the economy. New Zealand food price slightly increased. On the other hand, for the New Zealand, we could see that foreigners now they are holding less New Zealand bonds or debts, which means that generally the market, while the market is expecting to see the lower interest rate in New Zealand, so the foreigners they see less demand to carry their money to New Zealand, even though they're taking them back, carry back. So that means that that can be negative for the New Zealand dollar in short term as well, in short and mid term. Japanese service sector slightly slowered in July, while in the United Kingdom, labor data shows still it's strong, even thought we have some weakness in the average earnings. Average earnings excluding bonuses increased by 4.8%, down from previous 5%, but still positive, still good, still higher than inflation. And unemployment rate was steady, didn't change from previous 4.7% that we had. Later today, we're gonna have the inflation data from Italy, and then we're gonna have the inflation data from Canada as well. These are the important to watch. In Italy, we expect to see inflation slightly increase on the monthly basis by 0.1%, and the annual scale it's gonna stay unchanged at 1.6%. In Germany, we're gonna have ZEW current condition and economic sentiment data. In the Eurozone, we're gonna have the same from ZEW economic sentiment data, which is expected to slightly fall to 20.3, while in Germany, we expect to see again the weaker data from 34 down to 25 for the overall market sentiment. Wages in Eurozone, wages growth is supposed to be published, and we expect to see it slightly higher than previous month at increasing by 3.7%. Again, underlying that the inflation may slightly increase, and that can probably increase the chance of another 25 basis point rate cut probably in December or early 2026 in January. Industrial production in the Eurozone supposed to slightly increase by compared with the previous months. I mean, after the 1.3% following the previous month, in this month, slightly supposed to increase by 0.4% in a Eurozone. But the main focus will be on US retail sales data, where we expect to see that the retail sales and core retail sales both increasing by almost 0.4%. I mean, the core retail sales expected to increase by 0.4%, and retail sales by increase supposed to increase by 0.3%. But retail controllers also supposed to increase by 0.4%. Generally, the data on the retail sales shows that while the retail sales is still positive and increasing, but that can be slower compared with the previous month and maybe even compared with the expectations, while the import price and export price also supposed to slightly ease more, as that's completely against opposite side of the market expectation of seeing the higher import and export price after deploying the trade, the tariffs. But still, these data couldn't increase the prices, and market expecting lower data. Also, we're going to have retail and wholesale inventories to the industrial production, and also capacity utilization rates, which we do not expect such a good data from today, and that can increase the chance for more rate cut, as we can see in bond yields, which is slightly easing or slightly slowing down in recent days, supporting of more dovish policies, which can be negative for the US dollar index. Generally, looking at the market, geopolitical tensions and the market uncertainty, market uncertainty before central banks meetings, all of them, they increase the market risk. And now we can see the VIX above 18, while it was down under 15 yesterday, down to 48.95. Dollar index with this case slightly lowered under 97 area. I do still expect the dollar index to increase back above 97 before Fed meeting, but generally with the risk that now we have in the US economy, with the weaker expected data we have from US economy, that can be negative for dollar index. On the other hand, the gold and the silver, both of them, they take advantage of this weaker dollar and increase to the new highs, while in the energy market, gas, as it was expected, and we used to talk about this several times in the last days and weeks. Again, gas started to increase. Now the gas price traded at 3.24 cents, while the oil is compressed between two main market movers: slower economic growth and weaker economic data against increasing geopolitical tensions, and that can put the balance around $60 to $63 for now. Any up or down from these levels is depend generally to the power of how weaker economic data we're going to have, or how increasing tensions we're going to have in a market. On the stock markets, these weaker than expected data and the market expectations for today, all of them, they're increasing the chance of more hawkish, more dovish policies or less hawkish policies, which is positive for the stock market, and we can see S&P 500 increasing, while the Nasdaq is increased much more because of the tech companies, especially after the news that the US probably got some positive sign with the TikTok fate, and now probably they're gonna publish the new platform for the US for the TikTok. I want to see. Well, generally it was a positive, and that can support that supported the generally the tech stocks, and now we can see the the Nasdaq is increasing much more. While on the other hand, in the Dow Jones, while the overall sentiment is following the market and positive, but still it is slightly moving less higher compared with the other stocks. In the cryptocurrency market, Bitcoin, after yesterday correction, again the current again continued its general uptrend, trading around 116,000, and that's the price, and we expect to see 118 as the next target soon this week. Yeah, that was the market news, data, and condition. Hope it was useful for you. Talk to you soon. Bye.